Welcome to Pressure Points. Our topic is Micron earnings. For those of you who are new to the Micron story, the company is about $160 billion market cap. Stock has been strong this year, up 72% based on the AI hardware trade. And so the setup was a relatively high bar going into the quarter, and shares are trading off 7%. I believe that the reason why they're trading down is that those momentum investors just didn't see that incremental reason to be more positive about the story. I think long-term investors are going to view the quarter, the guidance, and the commentary on the call as favorable for this AI trade. And my conclusion related to the quarter is that the AI trade is intact. But I'm going to kind of step back and quickly go over the results. The May quarter was a slight upside on revenue and earnings. The August quarter the guidance was basically in line with expectations, and in an AI hardware world, if you guide in line, that's considered a slight disappointment. That's what we're seeing in the shares trading in the aftermarket. But we're going to jump into the pressure point, which is high bandwidth memory. And this, of course, is what was the pressure point, and it's what everybody was talking about on the quarter. It's only surprisingly 2% of total revenue today. It was nothing a few quarters ago. It's expected, based on kind of filling in some gaps with their commentary, my sense is it's going to be kind of 10 to 15% of revenue next year. So going from 2 to 10 to 15. It is a higher margin revenue, but it also has this effect of pulling up the margins of their other DRAM business. And the reason is that these HBM memory, which pair really well with like NVIDIA's GPUs for this incredible compute, the reason is that these take up more wafers. The current generation they're on is a 3-wafer. The next generation that comes out next year is 4 wafers. And what that effectively does is it pulls some DRAM supply over, these DRAM wafers, to build these HBMs. And so the effect there is it actually contracts some of the DRAM supply, and there's 2 other suppliers out there along with Micron, that's SK Hynix and Samsung, but it detracts that supply and therefore has an effect of creating less supply, therefore margins kind of go up for both of their businesses. So HBM has this nice effect of bringing up the margins across the board. They also gave commentary about kind of how they see the growth rate playing out, and it's favorable. They talk about the long term, which I put that in the 3 to 4 year range, to be 50% growth. Now they just reported 82% growth and 50% and 90% growth for the August quarter. But that commentary about HBM growing kind of 50% plus for the long term should be comforting for investors who are thinking 1, 2, 3 years down the road that this demand can continue. And so that was the pressure point. HBM is intact. Therefore, I conclude that the broader story, the broader AI trade is intact. There was another topic, not the headline topic, but a topic related to CapEx. They did talk about CapEx for next year being about $12 billion. The street was looking for just over $10 billion before, and that compares to $8 billion that they'll do this year. So we're seeing this big jump in CapEx, more than what some investors were expecting. They will get some of that back at some point years down the road through the CHIPS Act, so you get an opportunity to subsidize. But the reason why they're making that investment, most of that production is going to go to HBM, but the reason is that they're just seeing this incredible demand dynamic. It's just not slowing. They won't actually get capacity from that investment to the earliest 2027, some 28 and beyond, but they're really laying the groundwork for this to be more than just a 2 or 3 quarter story. They really want to kind of ride this wave here, this infrastructure wave that appears to be intact. So my takeaway from the CapEx, it was more, but that's okay because it's partially subsidized, and I think it is just a strong sign that they believe that the growth curve is going to be favorable for a while. And so that's that's everything in a nutshell. One kind of final piece is you navigate and think about this as an investment. This business can be boom and bust. We have an effect here of seeing some of the positive aspects of it. You generally want to invest during the good times. And while the stock will be down, I generally see this is the good times in the next year, 2 years for Micron. Longer term, there's going to be some point where they hit overcapacity and that ends up negatively impacting ASPs and margins. So We're not there yet. AI trade intact. And on behalf of Pressure Points, bye for now.